Well, thanks to Chris Buchanan for that update. Wayne McCurrie's in the studio, and financial shares were down 3% today, Wayne. It's been another really, really rocky day. Interesting to see that maybe the biggest headline was that the International Monetary Fund says globally banks have got $4 trillion in losses that they have to swallow. Now, Dr. Doom, Nouriel Roubini, said 3.7 trillion, and he was the worst of the commentators in January this year. It just shows that as the guys dig deeper, they find that there's still more and more problems.
Look, I mean, 4.1 or 4.3 trillion, whatever it is. Just two quick comments. People talk trillions now like you used to talk billions. It just shows you that. And secondly, President Bush went to war to find weapons of mass destruction in Iraq. They weren't in Iraq, they were at home in America.
As Warren Buffett's been warning for a long time.
They're the weapons of mass destruction. Yeah. Anyway, but look, our banking shares came under a bit of pressure. A little bit of a background. The overseas markets initially opened up down, and then Geithner was talking, saying that the overwhelming majority of banks in America
He's their Trevor Manuel. America's Trevor Manuel.
Are fully capitalized, and the Dow is up now 1.5%. So our market closed at a time when the US market was down. Hopefully when our market opens up again on Thursday, it'll be a little bit better. But the banks came down. Look, they weren't helped much, obviously, by what Maria Ramos said at APSA, saying things are tough, basically. It's not any new news, by the way.
That's Maria. She is conservative. You can expect her to go in there with a fine-tooth comb and make sure that any problems are put to one side.
You're not going to give an optimistic outlook.
Not now.
You most definitely are not. So, but by and large, it's exactly what people anticipated. There's no new information in there. But the bank's down 3%, APSA down 4%. I mean, they're all down 4%. Nothing terribly untoward about that.
Did you pick up on Vox Telecom today? There's a big knock today. It was down.
Yes, I did.
Down 15% today. What's the story there?
Look, Vox has had a bit of a turbulent time, with all the single stock futures and all other things that have happened to the company. However, I was a little bit surprised with their trading update, because their last financial update, the actual underlying business, forget about the single stock futures and all of those losses, the actual underlying business seemed to be doing okay, but yet they came with their trading update.
Did you understand
down 40%.
That? The trading update. Did you understand what they're doing? It sounds like an accounting issue that
it did sound a bit like that, but it was it was minus 40%.
You're a chartered accountant, so if you don't understand it, Wayne, what chance are the rest of us got?
I've lost out trying to understand accounts many years ago, especially in the new accounting regimes. And maybe that's something that this crisis will eventually sort out, is that you will report profits. You won't just report this barrage of numbers that no one can interpret in any way whatsoever.
And companies are forced still to pay to publish them in the newspapers, which also sounds a little bit ridiculous. Marion Roberts up 5% today. That's a nice move. Altec up 6%.
There was no specific news on Murray's, except to say that maybe it was clobbered too much when they announced the cancellation of the project last week. Barlow's was down quite strongly today, down 6%, and that was in the back of Caterpillar of America announcing their first quarterly loss in 10 or 15 years. And obviously Barlow's is a big distributor of yellow equipment.
We're going to hear a little later from Hendrik de Tooy. He spent some time with our Felicity Duncan today looking at what Investec Asset Management's views are. And Hendrik's in a good position because he's based in London as a chief executive of a group that's got big operations in London and in South Africa. But they came out in favor of high-yielding corporate bonds.
Yes.
Do you go along with that?
Yes. Clearly, look, there's been no joy on that side yet. But understand the so-called spread. In other words, the gap between corporate bonds and government bonds is incredibly high, and it is quite clearly taking into account more defaults than what will actually happen. In other words, in the price, the bond market thinks there will be more bankruptcies than what is actually going to transpire. So they clearly are good value.
Have you got a crystal ball?
No, they are. They are taking into account something like if you take the triple B bonds, which is not investment grade.
That's what Old Mutual are full of.
That's where they got caught out massively, Old Mutual. But if you take where the prices are now, there's probably anticipating a 30 to 35% bankruptcy. Now, the worst we've ever had, not even in living memory, in history, is about an 18% in the 1934 depression, the Great Depression. About 18% of companies defaulted.
Old Mutual stress test was only 5%. So if
But
it's
look,
more than 5%, they're in big
no,
trouble.
I don't think it's 5%. Alec.
That's what Julian Roberts said here, sitting in the seat that you're sitting in.
And
he said they did their stress test, and only in 1929 was it 2% or 3% or something along those lines.
That might
the fact of the matter
yes,
is...
No, sorry, you're correct. On total bonds, remember, they don't just own triple Bs, they own a whole spread. He's right on that. But on triple Bs, the default rate was 15 or 18% in the Great Depression, whereas current prices are probably taking into account something double that. And that is just not going to happen. The problem is the prices might only recover in a year's time and they might fall first. But are they value? The answer clearly is yes.
If you were invested in the JSE All Share Index, you could have lost 24% of your investment since September last year. But what if there was a risk-free way to recover some of your losses? If you're insured with Discovery Life, you can take advantage of the upfront investment integrator from Discovery Invest. Just invest in a 10-year endowment and will immediately boost your investment by up